Okay, we are back. Hope you guys had a great weekend, if it was the weekend between these times you watched these. I assigned two petty cash problems. Is that correct? So I want to go through those real quick. And let's go ahead. Excuse me. I assigned exercise 8.4 and exercise 8.5. Is that correct? So let's go ahead and do exercise 8.5 first. I want to do exercise 8.5. Okay? All right. Exercise 8.5, page 344 in your book. Reichard Company establishes a $250 petty cash fund on September 9th. On September 30, the fund shows $34 in cash along with receipts for the following expenditures. Transportation in, $47. Postage expense, $62. Miscellaneous expense, $103. The petty cashier cannot account for $4 shortage in the fund. Reichard uses the perpetual system in accounting for merchandise inventory. Prepare the September 9 entry to establish the fund, the September 30 entry to reimburse the fund, and the October 1 entry to increase the fund. Okay? So let's go ahead and do that. Okay, now I want to go ahead and do this on the Elmo so that you can kind of see the way that I think through this, especially in regards to the reimbursement journal entry. Okay, first thing we do is we establish a petty cash fund on September 9th, right? So the entry is on 9/9. Petty cash cash. Debit petty cash. And you credit cash. And then how much is it for? $250? Okay. So that is the entry there. Debit petty cash, credit cash. Okay? All right? Okay, now the next entry is the one that seems to give students the most problem. Okay? And it doesn't seem like it should be a difficult entry, but there's always a couple mistakes that people often make. So I want you to pay real specific attention to the way that I do this reimbursement entry. I've been doing these for 20 years, and I still go through this three-step process to doing my reimbursement entry. The first thing I ask is this. When I open that petty cash box, how much cash is there in that box? How much is there when we're reimbursing? They tell us that there is $34 in cash, correct? There is $34 in cash when I open up that box. Now, how much did we set up the petty cash fund for? $250. So there's $34 remaining in there because we've been spending it. We need to take it up to $250. So how much cash do I have to put into that box to bring the $34 back up to the $250 desired amount? $216. So that is the first thing that we do, is credit cash for $216. Okay? Now notice that we do not credit petty cash. We are crediting cash. As a matter of fact, on your notes, make a little note that says, note, this is not petty cash, because that's a common mistake that people will do when they credit that. Okay? Okay, that is the first thing that we do in building our journal entry. Okay? The second thing that we do in our journal entry is imagine this box, and there's $34 in there. We're putting $216 cash back in there. And what are we going to do now? Now we're going to take out those receipts, and I think there is, how many receipts are there? 3. There's 3 receipts, and we need to record those into the system as far as making sure that they get expensed or whatever. Correct? Okay. So the first receipt was for transportation in. Okay. Yeah, I wish they wouldn't have done this, but do you know what we debit for this? Anybody? Merchandise inventory. Good job, Zach. Okay. Your first instinct here, because you're not shifted into Chapter 5 gear, is to debit something like transportation expense or something, or delivery expense. But going back to chapter 5, remember in a perpetual inventory system, when we pay for delivery, we actually debit merchandise inventory, don't we? Again, I wish they wouldn't have tried. I don't like when they try to do two things in one problem. Let's just do one thing at a time. But what we debit in this situation for the transportation is actually merchandise inventory. And that's for 47. Does this make sense? Any questions on that? Okay. All right, we're still on this second step for building this journal entry. What's the next receipt that we pull out? Postage expense, and how much was that? 62? So we'll debit postage expense for 62. Okay? We have a third receipt, and they tell us that we're going to just debit miscellaneous expenses for those. Okay? Sometimes you have to create your own expense accounts, and sometimes, you know, there's a little leeway in that, but they already told you what we're going to debit here. So this is miscellaneous expense for 103, correct? Okay, so this was the first part of the journal entry. This was the second part of the journal entry. Now the third and final step of this journal entry is you ask yourself this: does this journal entry balance? Do the total debits equal the total credits? And what's the answer to that? No. Which side needs help, and by how much? The debit needs $4 more to make this thing entry, correct? To make this thing balance, I should say. So put your $4 there, and what account does that go to? Cash, over and short. Now, if it would have been light on the credit side, then put your number here. Now, don't ever put a negative number in a journal entry, by the way. But your third step is to say, does the journal entry balance? If it doesn't, put the number on either the debit credit side, and regardless of where you put it, the entry that you debit or credit, or the account that you debit or credit, is cash over and short. Okay? What type of account is cash over and short? Well, it's kind of a weird little account. It's a temporary account, goes on the financial statement. If it has a debit balance, it's an expense. If it has a credit balance, it has a revenue. It's a revenue. And which does it usually have? Usually has a debit. Okay? Usually it will have a debit. Okay? Now you're not too concerned about $4 here. Okay? Probably not going to call the FBI to try to find that $4, are you? Okay? So that is the reimbursement entry on 930. But did you see how I kind of built that entry? Here's why I build the entry that way. To do this, this, and then the third is balance. Because I have a lot of people that record those expenses, and in that case it would add up to 212, and then they credit cash for 212. You see what I'm saying? And that's a mistake, isn't it? They record those three expenses, or those three receipts, and then they add those up, and that's whatever they credit cash for. Sometimes that'll work too, if there's no cash over or short. But you really need to go through that three-step process, like I told you, if you want to avoid missing points if there's a cash over and short situation. Make sense? Okay. All right, the third entry is to increase the petty cash fund up to 300. Okay? So, what do we debit and what do we credit? We debit petty cash and credit cash. Not for 300, but for how much? For 50. Okay? For $50. Okay? Does that make sense? Okay. Good. Good, good, good. Any questions? Okay, what I want to do now is, now that we have worked through one of those, I want to take about 90 seconds, maybe 2 minutes, and I want you to look back through exercise 8.4, see if you did it right, okay? See if you did any of these mistakes. For you who are face-to-face, you can check your answers with your neighbor. But let's take about 90 seconds, 2 minutes, roll the music, and let's go through that, okay? We'll be back in just a couple. Okay, let's take a look over exercise 8.4, all right? Let's look first at the journal entry to establish the petty cash fund, okay? And there it is there, debit petty cash, credit cash for $350, okay? The next thing it does is to ask you to reimburse it on January 8th, right? Okay? The journal entry to reimburse it is this. Now, there was no cash over or short here, was there? So you could have not done it the three-step way and you'd have had the right answer, but that would maybe give you a false sense of security, thinking you can do it that same way. So again, I would do it that three-step method. Ask how much cash was in the box, and they said that there was 140, right? So you have to credit cash for $210 to bring it up to the amount. Then record those receipts. That's the second step. And then the third step is to ask yourself if the journal entry balances, and in this case it did, didn't it? Okay? All right. It says in part 3, it wants you to both reimburse the fund and increase it to $550. Okay, and it says, assuming no entry in part 2, hint, make 2 entries for part 3. Well, technically the answer here is these 2 entries right here. But this is the exact same entries you just made, right? So if you wanted to say C entry above, that's fine, okay? I don't know why it wanted you to do that. It's kind of weird the way they asked it, isn't it? But these are the 2 entries. Now, I will tell you this. Some students say can you combine those two entries into one entry? And I guess my answer would be, well, you can as long as you combine them correctly. But I got to tell you, I still do it as two separate entries. I think it's real. That's the way I think through it anyway. And so I think it's easier to not make a mistake by just doing it as two separate journal entries. There's no reward for having fewer journal entries, okay? So why don't you just keep it two separate journal entries, accomplish two separate things with those two journal entries, and I think they'll be less likely to make mistakes. Make sense? Okay. Any questions on the homework? There's usually always one of those kinds on the test, okay? Usually always one of those on the test. That'll be very similar to exercise 8.4 or 8.5. Okay? All right, let's move right along. I want to get to a very important section of the class. As a matter of fact, before we go over here, what we're going to talk about now is our bank reconciliations. Okay? How many people here have a checking account? Probably everybody, right? Okay. How many people do a reconcile their bank account each month? Anybody? Okay. Okay. Now, I will say this. I've had students before that say, well, I don't do a formal reconciliation. And of course, I guess I should define what a reconciliation is. A reconciliation is when you compare the bank information to your recorded information. They usually won't equal, and you have to figure out why they don't equal, but eventually you get to a reconciled number that equals each other exactly. Okay? Now, some students will say, well, I don't do a formal reconciliation, but I look through my online activity every day to make sure it looks good, or every week to make sure it looks good. Okay? That's great that you do that, but I will tell you this, that's not the same thing as a bank reconciliation. Okay? It's not the same thing as a reconciliation. Let me give you some examples. If you just look through your bank activity, of course you're looking for something that looks strange. Okay? But let's say you always get your gas at Quick Trip. Okay? Let's say that Quick Trip accidentally rang you up for a gas purchase that you didn't make. Do you think that 3 weeks ago, if you saw Quick Trip, that it would give you a red flag in your brain? Probably not. Or here's the other thing. Let's say you deposited your paycheck a couple weeks ago, but for some reason it didn't credit you enough. Well, you might see your paycheck and go, okay, there's the paycheck. Are you really going to remember exactly how much your paycheck is? Or let's say Brett wrote me a check for $50 for a book I sold him or something. And I put it in there and I deposited it and they put it in the wrong account. Would I catch that? Would I look through that online activity and go, I remember something I did that's not here? Yes, it's one thing if you look through your online activity and you see some weird stuff that doesn't belong. But it's an entirely different thing if they have omitted something that should be there. Does that make sense? That you don't see. Okay? If you remember nothing else from this class, I want you to remember the following. Do your own bank reconciliations. Do your bank reconciliation and do your own. If you ever own or co-own a business, don't let your K-Lemon do your bank rec. I will tell you this, and I haven't discovered, tons and tons of fraud, but I have been a part of audits or consulting gigs where there was fraud. And I've heard stories too from people I know. Most of the cases where there was fraud, it could have been prevented had an independent person, per se the owner, been doing the bank recs. Does this make sense? Been getting that bank statement and looking through it and reconciling it specifically. Okay? Here's another reason looking through online activity is not a reconciliation. Brett, let's say you're the owner of the bank, and so you're like, well, I know I have some employees who are my accountants. I'm going to look through the online activity every day to make sure it looks okay. So you look through it. You might see some disbursements that look really normal. Like, let's say you are a landscaping place, and let's say you see a disbursement to AJ's topsoil. That may look very, very, very normal. But you know what? AJ's Topsoil could just be a false company that your bookkeeper created so that the disbursement would look normal, but in essence, she's doing the same thing as writing herself a check. Does that make sense? A lot of people do things other than bank recs, and they don't, and they're not, and they have a false sense of security. Okay? You should be an owner that knows your vendors, okay? Knows your vendors, okay? And if you see a new vendor, you might, a lot of times new vendors or new payees cannot be added without the owner's express approval, and the owner checks that out, okay? Again, I don't want to be cynical here, and I don't want to be pessimistic, but I'm just saying this. If you own a business, and if you have a method where people can steal from you and they won't get caught, chances are they're going to do that. You've got to establish those obstacles. Does that make sense? One of the best ways we can do this is with a bank reconciliation. Okay? One last thing, and then we'll actually talk about these. In my life, I reconcile my checking account. In my life, I have discovered about, and I kind of kept a mental tally, about $2,200 worth of errors on my bank recs. Now that's probably about a total of 15 to 16 errors, 16 errors. And some of those were pretty big, okay? Of those 16 errors, do you know how many do you think were in the bank's favor had I not found them? And how many of them were like in my favor had the bank not caught them? They were all in the bank's favor. It was never a situation where they put a bunch of money in my account that wasn't mine and I discovered it and called and said, you need to take this money out of my account. It was always disbursements that they had in my account that I did not make, or one of the biggest ones was a paycheck that I put in that they accidentally put into the wrong person's account.
I've had that happen.
Yes, that happens. I can remember this happened like 4 years ago, or actually it was longer than that, about 8 years ago when I was an adjunct here. And I just taught here like one class part-time. And JCCC wrote me a check. It was, I don't know, let's say $620. And I was doing my bank reconciliation, and all of a sudden I had this in my records. I keep Quicken, Quicken financial software, and it didn't clear. Well, deposits are not like checks. They should clear real quickly, shouldn't they? And I was like, well, what's the deal here? I thought, well, I wondered if they wrote me a check and I just didn't deposit it. Maybe I have a check, in my inbox or something. Looked around, didn't see it. The other thing I thought was, well, maybe I accidentally recorded it twice in my Quicken. And the one of them cleared and the other one's just hanging there. No, that didn't look like it did. So I called JCCC and explained the situation. I said, did that check clear on your side? Do you have that as an outstanding check, one that you've written that hasn't cleared the bank? Or is that a check that the bank has cleared? And they said, well, it's cleared. And I said, can you tell where it was deposited to? She says, well, and it was she says, I'm going to have to go through the archives or whatever. I said, well, you better do that. Well, it turns out, and so then I got the information. Then they mailed it to me. Then I gave it to the bank. The bank investigated it. A week later, they said, you know what? We deposited that $620 in the wrong person's account. And so they credited my account. Now, a couple key things from that story. Number one, there were a number of times during that story that I almost just thought, I'm sure it was my mistake. I'm too busy to deal with phone calls and waiting for mails and going to the bank. I don't have that kind of time. There were a number of times that I almost aborted the process and just said, I'm sure it's fine. But for some reason, I never did. And I'm glad I didn't. Because nobody would have caught this, perhaps, if I wouldn't have caught it. You see what I'm saying? Now, I don't know. Maybe you're rich enough where $620 is not that big of money for you. Sure. But for me, it is. And I'll always remember that, okay? Always remember that. All right? Just this last week, somebody hacked into a vendor where I used my debit card, and I had to cancel my debit card because there were some erroneous charges there. Okay? All right? So, okay, let's talk about bank recs. All right. The bank reconciliation and bank activities can act as very, very good controls. Very, very good controls as far as internal controls. Okay? We have bank accounts. There are signature cards where you can set up your banking where only certain people can sign off on checks, and maybe if you're an owner, it's only you. You have to sign every check. Or sometimes you can say if it's a check above a certain amount, there needs to be 2 signers or something like this. You have deposit tickets, bank statements, all sorts of records for you to reconcile this area of cash. Now remember too, cash is the area that people want to steal the most. You know, if you have inventory of sweaters, yeah, maybe somebody would like to steal a sweater. But if they can get the cash, they'd rather have the cash. Okay? They'd rather have the cash. So anything involving cash, you've got to be very careful on. Okay? Now, here on this screen on the left is a bank statement. And the bank says that your balance at the end of May 31st is $2725.92. Well, then you go over to your T account, or your ledger, which is on the right side, and it says at the end of May that you have $2481.18. Why are those balances different? Well, there's a number of reasons why, isn't there? There's checks that you have written and you've deducted from your books but have not yet cleared the bank. There may be deposits that you've made at the end of the day on May and you put it in your banks, or you put it in your books, but it hasn't yet cleared the bank, right? There's a number of different items that would cause those two balances to be different. Those are called reconciling items. Okay? Those are called reconciling items. Let's take a look at those. Well, before we take a look at those, there's reconciling items, and there's really 2 different types of reconciling items. There's reconciling items that the bank knows about and they have in their records that we don't yet have in our records. Okay? There's also items that we have in our records, but the bank does not yet have in theirs. You see what I'm saying?
What's that called? Pending.
Pending. Yeah, that's one word for like pending transactions might be a term that you hear. Okay? So let's take a look at this. What are some things that we may have in our records that the bank doesn't have? Actually, let me back up a little bit. Let's go back to the Elmo. So what we are going to do here is we are going to, let me get the exact amount too. I think what we said was the balance per the bank from that slide that we looked at was $2725.92. Is that correct? Okay. And the balance per the books, meaning our books, or the balance per GL, you could say, was 248118, correct?
Yep.
Well, those amounts are different, aren't they? So we're going to have some items that we have to add to this side and some items that we're going to have to deduct from the balance per bank side. There's going to be other items that we have to add and deduct from the book side, and hopefully we will get down to a number where they equal, the two numbers equal. Okay? So let's take a look at those. An item that we know about that the bank may not know about is what's called a deposit in transit. A deposit in transit. Okay? A deposit in transit is a deposit that we have made that it does not yet show up on the bank statement. For instance, we were looking at a May 31 bank statement, weren't we? If we went at the end of the day on May 31st and made a deposit, it probably wouldn't show up on the May 31st bank statement because most of the times deposits made after 2 don't show up on the bank statement, right? Or sometimes they even have to clear for 2 or 3 days, right? So that could be one thing. Now, I will tell you this, in regards to deposits, if you have a record, if you have a deposit recorded in your books, and it's another week, week and a half later, and it hasn't showed up yet in your bank activity, on your bank statement, or on your online activity, there is a problem. There's a problem, and you need to investigate that right away. Why hasn't the deposit showed up? Okay? Now, another very, very common thing, and this is always something you have to deal with, is what's known as an outstanding check. Now, an outstanding check is a check that you've written for your business, you've deducted your cash amount, you have sent it off to the vendor, but it has not yet cleared the bank. That could be for a number of reasons. Okay? That could be because the person, it's sitting in somebody's inbox. Okay? And you can have outstanding checks for, they're not like deposits. You can have outstanding checks that 2, 3 weeks, maybe even a couple months, couldn't you? My mother, God bless her, writes me a birthday check on my birthday. My birthday's tomorrow, by the way. I have to go to a funeral, but that's all right. She writes me a birthday check, okay? And there's been times that I've put it in my to-do box, and I forget to cash it for a while, okay? And she's the type, she's a very organized person. She'll call up and say, can you please clear that check? Or can you go deposit that bank because it keeps showing up as a reconciling item on my bank statement. You know what I'm saying? It keeps showing up as an outstanding check, okay? So checks can be outstanding for quite a while. The other thing on the bank statement side, going back to the screen, is there could be a bank error. And this is what I think I talked to you about, is if you made a deposit that the bank did not put into your account, or maybe they, here's another error I found once doing a bank reconciliation, is a bank was charging me a $30 non-sufficient funds check charge because supposedly 3 of my checks bounced. Well, yes, yes, I was writing checks. I didn't have cash in the checking, but I have it set up with my bank where it just automatically sweeps it from my savings account. And I had to call them and say, no, wait. Remember, I have an agreement set up with you guys where it just takes the money from my savings account to my checking account. Okay? So that was why I wasn't worried about writing those checks when I didn't have the checking in there because I had a lot of savings. Oh, I'm sorry, sir. And they gave me credit back for those non-sufficient funds charges. Okay. What about things that the bank knows about that we don't know about on our books? Well, those things could be like collections made by the bank. Every now and then a bank will act as a collector of notes receivables, and we have to usually pay a small fee for that. But that's something we have to add to the bank side. I'm sorry, add to the book side. A lot of times you get some interest on your account. You get some extra credit to your account. And a lot of times you don't find out about that until you actually get your bank statement. So that's something we have to add to the book balance. What about non-sufficient funds checks, NSF checks? Sometimes those are called bounced checks. Okay? Well, it says we have to deduct those from the book balance. How does that work? Okay, come back to me real quick. Here's how it works. Joe Schmo pays me a check for $300, and I deposit it in the bank. Well, as soon as I deposit it in the bank, I increase my cash by $300 on my books. Because I don't wait for things to clear before I make journal entries. You see what I'm saying? So I increased my cash by $300, assuming that the check that Joe Schmo wrote me would clear. 2 weeks later, I find out it did not clear. It bounced. So what do I have to do? I have to decrease my cash and back that $300 back out. Does that make sense? Okay? And then what I'd usually have to do is set up a receivable and tell Joe Schmo, you still owe me money. As a matter of fact, I may charge him a little extra because maybe I had an NSF fee. Okay? So that's what a bounce check is, or a non-sufficient funds check. All right. We have to deduct a bank service charge. Okay, they might charge us like $5, $6 a month. And we have to find out, and we find out about it when we get the bank statement. So that's something that the bank knows about that we don't know about. And we have to deduct it. And there certainly could be book errors. A lot of times you will record something incorrectly. Like let's say maybe you got a check, or maybe you wrote a check for $158 and you accidentally recorded it as $185. You just switched your numbers. You ever do that? Okay. You might find out about something like that when you do your bank rec. Here's how this all looks. When you do a bank reconciliation, you are going to start going back to the Elmo. You are going to start by writing your balance per the bank right here and your balance per the book right here. And then you're going to take those reconciling items and you're either going to add it to the bank side or deduct it from the bank side, or add it to the book side or deduct it from the book side. And hopefully when you add or subtract all those items, you're going to get down to two numbers that are going to be equal. And you can read your book and it'll talk about how to do this. But that's a very important thing that I want you all to be able to do. Okay? And that's kind of what this is saying. Let's look at an example real quick. Let's do a July 31 bank rec for the Simmons Company. Now, the July 31 bank statement indicates a balance of $96.10. Let me get my pointer going here. The bank says we have $96.10 at July 31. We look at our books or at our general ledger and it says we have $74.30. Well, those numbers aren't the same, are they? We need to reconcile them. Now, they give us some information here. And we're going to have to move through this somewhat quickly, so bear with me. You can look at it a little bit later after class. Outstanding checks total $24.17. There's a deposit in transit in regards to a $500 check that we mailed to the bank and it had not yet reached the bank at the bank statement date. That's a DIT, deposit in transit. There's a bounced check for $225. The bank says that there's $30 interest that we didn't know about that we earned during that period. Here's an error we made. Check number 781 for supplies expense cleared the bank for $268, but we mistakenly recorded in our book as $240. And lastly, a $486 deposit by Acme Company, which is not us, was erroneously credited to our account by the bank. Okay? Well, when we do this bank rec, here is what it's going to look like. And I know I'm throwing a lot out at you, but you can, again, look at this after class a little bit more. Here is those two balances that we started with, and they didn't do it side by side. They did one above the other. That's fine. They added the deposit in transit. That's something that you add to the bank side. We need to back this money out because that money should not be in my bank account. That's a bank error, isn't it? We also need to deduct those outstanding checks. The bank does not yet know about those checks. They're going to find out about them sooner enough. But we really need to deduct that $24.17 as well to get our true bank balance, right? Then we get down to our adjusted balance of 7207. Okay, let's do the book side. Our book balance is 7430. Okay, we need to record the interest, and we add that to the book side. There's also a recording error, and how do we deduct that, or what's the thinking there? Well, here's the thinking. Come back to me. We wrote a check for $268. That's the true amount of the check, right? So we should have reduced our cash by $268. We only reduced it by $240 mistakenly, correct? So we got to reduce it by the other 28. Okay? I always have to do that hand thing. Here's what I did, here's what I needed to do, and that always tells me what I should do. Because there's other times that you might record a disbursement for too much. So going back to the screen, we have to deduct that $28 to bring it down to the amount we should have. There's also a bounced check. Now, we recorded that bounced check as an addition to our cash earlier, but we have to back it out because it didn't clear. That brings us to an adjusted balance of 7207. And those equal, don't they? 7207, 7207. And I like it to balance to the penny. Okay? Because if it's only off by a few dollars, there could be two offsetting errors going there, couldn't there? So I like it to balance to the penny. That is a bank reconciliation. This is what I want you to do as owners of your business. Do not let your Kay Lemon, and you know, this is a real life woman. I always feel sad if she watches these shows and know that her crime is still being reported. But do not let this Kay Lemon lady in your business reconcile your bank statement, because she wasn't she? Why was she doing the bank reconciliation at that lighting company, guys? Why was she doing it?
To cover up her tracks.
Well, she was doing it to cover up her tracks. Why did the owner let her do it? He mistakenly trusted her, and he probably had Friday afternoons. He's like, you know, I could do one of two things. I could go play golf, or I could stay here and do the bank rec. Golf, bank rec. Golf, bank rec.
But I do both at the same time.
Well, that's what he should have done. She should have done one and then the other. But basically what he said is, I'm going to go play golf. Kay's a great woman. I know her. I love her. But Kay, I'm going to play golf. Will you do the bank rec while I'm gone? Well, I hope you had a lot of fun playing golf, because ultimately they lost almost $500,000, right? Okay? Do your own bank recs. As a matter of fact, if you get the paper bank statements, do not even let them come to your business and get opened. Have them sent to your home, or have them sent to your desk, and you want them unopened. If it were me, I'd have them sent to your home. You do not want that record tampered with. I can tell you next class period about how a fraud situation that I heard about where they were tampered with. Okay? All right, last thing, and I'm going to go through this real quick. After you do a bank reconciliation such as the one you see on your screen, you have to make journal entries for one side of this, or one half of this bank rec. Which side do you think? The bank additions and deductions, or the book addition and deductions? The book. So the entries you make would be this. And you can read about those in your book as well. But we need to debit cash or increase cash for that interest revenue. And you know, really going back to this, here is an add for $30 to your book cash. Well, how do we add to cash? We debit it, right? Down there lower is a deduction from our book cash of $253. How do we decrease cash? We credit it. So half of these journal entries should write themselves. You just have to figure out where the other half of the journal entry is. In regards to the interest revenue, we credit the revenue account called interest revenue. That $28 was the supplies expense. Remember how we didn't reduce cash by enough? Well, we also didn't increase supplies expense by enough. We only increased supplies expense by a mistaken amount of $240. We need to debit or increase supplies expense for that additional $28. Does that make sense? And then we need to book this receivable again because this idiot wrote us a check and it bounced. So he still owes us, doesn't he? And then you send your goons out and break his legs. No, I'm just kidding. You don't do that. Okay? Edit that out. Okay? No, but you give him a nice phone call that says, hey, that check that you wrote me, it didn't clear. Can you write that again, or can you bring cash down to the office? Okay? Are you with me? Okay. And then after you do that, this is your general ledger or your T account. After you do that, your balance of cash should equal that adjusted balance of 7207 after you make those journal entries and post them. Okay? All right. What I want you to do for homework is this. And, you know, I want you to really work on this. If you have troubles, don't just close your book and quit, but read the book and figure this out, okay? Because this is a very important part of this class. But what I want you to do for the next period is exercise 8.8 and then exercise 8.9. Okay? That's all I want you to do, but I want you to do it. Make that baby balance and make those AJEs, okay? We'll see you next time.